Welcome to SmithWeekly Discussions, an occasional program for our members of SmithWeekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. We remind our audience to examine our show notes attached to each of our shows to better understand how our program functions. Before we get into our discussion, we want to say thanks for questions coming from our audience at SmithWeekly, including Mike P., Edward S., Cindy W., Jack T., and Paul M. On the program today is a returning guest and one that we're pleased to have back with us. Mr. Marshall Koval is back on the podcast. Marshall is the president and CEO of Lumina Gold. The company is focused on its large-scale Cangrejos gold and copper project in southwest Ecuador, which is in its final stages ahead of final feasibility study, finishing the construction financing, and of course a decision to build the project. The Cangrejos project is the largest primary gold deposit in Ecuador. The company is listed on the Toronto Venture Exchange under the symbol LUM and also on the US OTC markets under the symbol LMGDF. Mr. Koval, welcome back to the podcast.
Hey, really happy to be with you guys today, you and your viewers.
Yeah, Marshall, thank you. It's always great to have you back, and always a pleasure to speak to the Lumina Group and, of course, the various companies that are there, and of course, specifically with you. I know you've been on the podcast a number of times, and it's really been quite a road here advancing Lumina Gold, and really good to see all the progress come together here. And it looks like we're coming to some pretty important points for the company here soon. Good to have you back. I'd like to start off here first with getting your take on the current markets, more geared towards development juniors out there, and what you're seeing, including any concerns you might have with the market at this point, or maybe even the broad market as we enter the final quarter of the year.
Yeah, I think one of the backdrops that we need to talk about is kind of where gold price is headed. I mean, as we speak today, I think gold's about 25.80. I think what you're seeing is the majors, they're moving up. The mid-tier, major and mid-tier producers have moved up, but there's still a gap between equities and the gold price that we haven't seen. You know, I've been in the industry some 45 years now, and I don't remember a time when there's been a further gap. So then when you go down to the developers, the mid-tier and junior developers, you've got an even larger gap. So my view is that at some point this has to correct. I think what you're seeing with the developer space is some M&A activity starting, but I think you're having to move projects further down the line towards feasibility study. And in the case of a few projects, they've gone all the way to initiation of construction. So it's a lot different environment than we've seen in the last couple of runs where gold prices moved up. But that's kind of the state of where we're at today.
I think you've seen way more than I have, Marshall, some of these changes in the markets and more of that, I suppose, confirmation on that all important social government acceptance, community acceptance of these projects. And that's probably in part of the issue that I think you're speaking of there, is to see these things go right down to financing package, permits in hand, and let's go ahead and start building the project. And in some cases, let's see the project produce at the capacity you say it's going to produce. And for sure, I think that those are some of the issues we see out there. But there are some standouts. I do think Lumina is at a very interesting position here and is a standout as well. And I do think that Ecuador is a place that continues to gain traction at our desk in terms of a jurisdiction that is quite friendly to mining operations, and as they transition not just from fossil fuel production, which is all good, but also that mining really is a lot better than oil and gas only, and you have to have maybe potentially both, and some countries don't have both, but I do think that they've seen that, and it looks quite positive here with a couple of model examples out there in Ecuador, as you well know. With that, I'd like to have you give any final comments there, of course, Marshall, but also how about just a brief overall operations update at Cangrejos, and then we'll get into a few specifics.
Okay, you gave me a bunch to unpack there. Let me start with Ecuador, and then let me talk about the metal prices and what it means to Cangrejos, and then let me talk a bit about where we're at with Cangrejos development. So if you look at Ecuador, I mean, we entered the country in 2014. You've had four governments since then. You had a far left populist government, kind of more center left government, and then a center right, and then the current government of President Noboa. He's a strong capitalist. He realizes that you need foreign investment to grow the economy in Ecuador. So, through those four successive governments, what we've seen is an improvement in the fiscal and regulatory regime in Ecuador. Permits, we just merged our other company, Luminex, with Adventus, and then it was taken out by Silvercorp. And through that process, Silvercorp and the El Domo project received all of its construction permits, environmental permits, and it'll be the next mine built in Ecuador. So you've got two major mines that are in production, Lundin Gold's Fruta del Norte, and then Tongling in China Rail have Mirador. And both of those mines have undergone expansion and have current expansion ahead of them. In the case of Mirador, they just announced a 600 and I think it was 25 or 650 million investment over several years to go from 60,000 tons to 140,000 tons. And Lundin had gone up in the upper 4,000, I think it was 4,800 tons per day, and they're shooting for over 5,200, I believe, ton per day throughput at the project. So all in all, what that means is Ecuador now is this year is projecting over 4 billion in exports. So the mining sector is really moved up as far as the importance in the country. And what you also see is in March of this year, mining exports passed bananas on a revenue basis. So mining is more and more important in the context of the Ecuadorian economy, employment, and that's responsible mining that I'm talking about. So if you go back to Cangrejos and you look at the metal prices that we were just talking about, we did a PFS in 2023, early 2023, and we had a 2.2 billion NPV at a 5% discount rate using 1650 gold and 375 copper. If you go the 20% up case, which is more or less where a lot of analyst consensus is for long-term gold, that same PFS gives you 3.5 billion NPV, and the IRR goes from 17 up to about 23%. So there's a lot of torque to Cangrejos to the upside in metal prices. And then when you look at it one more time and you bring it to current spot prices, you're way up over 4 billion NPV. And contrast that against a market cap of some 200 million Canadian on the TSX. So there's a lot of leverage to the gold price. Back to the macro on the developers, we haven't seen it move up yet, but I think by any metrics, a project like Cangrejos that can produce roughly 500,000 gold equivalent ounces over a 20-some year period is vastly undervalued. So I think that's sort of the investment thesis. And one more thing on the investment, we put out our first resource in 2017. It was 4 million ounces of gold. Today we have over 20 million ounces of gold and 2.65 billion pounds of copper. Just looking at the gold price alone, it's gone up about 100% over that time period. We've quadrupled the resource and put out a PFS, so we have a reserve, and the share price is flat since 2017. So I think it's a good time to look seriously at the company. We're de-risking the mine, and basically we'll have a feasibility study in the end of the second quarter of 2025. We're working on investment protection agreements that gives us royalty protection, tax rates, all that stuff with the government as we speak. And we've initiated the EIS, which we hope will be completed at the end of 2025, early 2026. So we're moving fast here.
Marshall, thank you for that. Yeah, that's some interesting points there on the project itself. It looks, from everything I've seen, quite good. And also that it's teetering on, gold equivalent ounce tier one, or, if you look at it just on a gold ounce basis, it's creeping up as well. And I would say there's probably enough exploration potential on further expansion and maybe some tweaks to the production profile that it is possible indeed to kind of get to that if we want to characterize Mark Bristow's tier one operation threshold as well. I think it's very close to that. in my opinion, as well, with some additional work here. So thank you for that. With that, you just at the back end here, you mentioned the exploitation agreement with the government of Ecuador. That was one of the things I did want to discuss with you. What do you expect there, first of all, on that? Any highlights there? And then also, what do you think that will be put in place in terms of at least binding terms reached?
Yeah, so we're basically in the process of those negotiations as we speak. We're the first company in Ecuador to have an exploration investment protection agreement, and that's been in place for a while. We're updating that, and basically what we have is negotiations through the construction period and then into production, where you set the royalty rates, the tax rates, the import duty rates, those sort of things. And that's the negotiation that we're working on right now. So we've had two face-to-face meetings, and we've had several Zoom calls working on that. And so what Ecuador has is particularly they're focused on the royalties. So they've got a sliding scale royalty from 3 to 8%. Initially, when Fruta went in, they had a 5% flat royalty. So now the government, sort of from 2018 and on, has worked on having a sliding scale royalty between the 3 and the 8%. So we're in the process of negotiating that as we speak. So we hope to have a binding term sheet here in the next few months. That's kind of where we're at.
Okay, looking forward to seeing how that goes here, and it looks like that likely gets wrapped up here by the end of the year. Just on another item of news here, of course, as well, is it appears the company will be tabling that feasibility study sometime around mid 2025, and that Azenco is leading that work out of Australia. Any comments on the feasibility, expected highlights that you can say, of course, now ahead of that? What do you see as those next work items that you'll be focused on post release of that feasibility study?
Yeah, good question. So we've gone back, and in the PFS, we looked at an initial throughput of 30,000 tons per day, and then in year three, expanding to 60,000 tons per day, and then in year seven, going to 80,000 tons per day. What we've done is we've gone back and decided that we wanted to move some of the gold ounces forward. So we're looking at 40,000 tons per day in the feasibility study, probably in year five or six, going to 80,000 tons per day. We're working on the mine plan as we speak, but that's the current plan. That'll bring some of the high grade mineralization in the Cangrejos pit forward in the mine plan. Talking sort of in years sort of 9 and 10, and that time period. There's a lot of material that's plus 2 grams per ton and 0.5% copper that we want to move forward in the mine plan. The other optimization work that we've done is we went in and did an extensive pit slope geotechnical program, trying to optimize the pit slopes to reduce the strip ratio. One of the big differences between the PFS and the FS is we had no low-grade stockpile in the PFS. We've got one now in the feasibility study. And what that'll do is allow us to, that combined with the pit slope optimization, lower the stripping ratio from the PFS. We believe from PFS was about 1.36 tons of waste per ton of ore, and I think we're going to get closer. We're going to get below 1.2 tons of waste per ore. And what that really does is that really talks to mining costs. The less material you move to get to ton of ore, the better you are. We get a lot of criticism sometimes by the lower grade nature of the deposit, but this is a big homogeneous deposit. Think more of a copper porphyry than a traditional gold deposit. And basically, if you take the equivalent grade of our peers and you milling peers and you divide it by the strip ratio, we move from the bottom of the stack up to the top two or three. And really what that speaks to again is mining costs. So we're working on optimizing the mining costs. We're looking at a larger haul truck fleet. We're doing a lot of this sort of stuff. We're looking at reconfiguration of the flow sheet to try to get the best gold recoveries that we can. We just finished up an extensive metallurgical program, and we're in the process of locking down the flow sheet. We're going out to equipment vendors for mechanical equipment bids. We should, in the next week or two, have electrical equipment bids. So we're really advancing the engineering beyond the fieldwork program, which is complete, to final design for feasibility study and costing. And so we're in the heavy engineering phase right now.
Very well. Looking forward to seeing some of that results come out, some of those optimization work that's happening as well with that study. Again, I think you guys have done quite a bit of work to de-risk the project, and that some of those key items, like on the permitting front, which I'll get into here in just a moment, is potentially one of those last things that's maybe a bit of overhang, because there is a disconnect, and you and I have been talking this disconnect for quite a while now. But I do think we're getting towards that final area where there can't be too many disconnects left, that you guys tie those loose ends together. With that, on the permitting status, Marshall, you mentioned before, it looks like that permitting work potentially could be completed by early 2026, or maybe before if things go well. Just any comments on the permitting front, anything you see as a major hurdle to get past, and what you see as the timing to have all permits in place ready to construct?
Yeah, so that's a good question. So take that in a couple different ways here. Basically, what you're after is to get your operating permit and the ability to construct, right? So there's three main gating items that we're have to get, and we've talked about them already. The first one is to have the feasibility study complete. The second one is the binding term sheet with the royalties, tax rate, all that stuff with the government. And then the third one is the get an approved environmental impact statement, which gives you the environmental license. Once you have those main three things, and there's some other minor permits that are important, but these three gating items, once that's in place and the ancillary permits are in place, then you get your operating license from the government. Then you sign the exploitation contract, right? So what we hope to be in the position here in sort of early 2026 to have that all wrapped up.
That's probably one of those last factors I think that he has a little bit of an overhang here, is just that permitting. The timing actually makes quite a bit of sense here. I think by 2026 we should have probably some different market conditions, I would suspect. I mean, I'm saying that in the sense that it's taken many years to even get where we are now, of course, and there hasn't been the response that we would expect. But certainly, you guys are getting to that point where either an M&A transaction occurs, or that decision to construct moves forward, and you guys get started, obviously, with that permit overhang gone. Just with some of the potential further work in the field on exploration and expansion, Marshall, as you guys go through these last few hurdles over the next really year and a half, is there any other exploration or expansion work that you guys want to bring forth during this process while you guys deal with these other items?
So let me just back up to the make a comment that we do have the EIS contractor in place, and we're starting the field work related to the environmental impact statement. What you have to do on that is you have to have two public hearings, information hearing, and then a follow-up meeting with a non-binding vote. So we're looking to submit sort of the EIS sort of in the June, July timeframe, and then the balance of the year have those public meetings. So that's that. I just wanted to bring that out because that's an important timing issue. Back to the exploration question, there are significant exploration targets still within the property, and we got to the point where we grew the resource and the reserve based on the PFS to where there's 20 million ounces of resource in gold and 2.6 million pounds of copper in the resource. And in the reserve, in the probable category, we had 11.6 million ounces of gold in the production plan and about 1.4 million pounds of copper. So when we really looked at it, we really needed to get beyond the drill bit because the drilling and intercepts wasn't doing much for the company in the market. So, we really moved towards advancing the development of the project. Now, having said that, the Grand Bestia deposit remains open. We stopped drilling on the top of a ridge, and it's open to the northwest and west, and the mineralization continues over the hill. So in the future, more exploration work there could even lower the stripping ratio further and bring that northwest western area of Gran Bestia into a mine plan. And then it's still open at depth. What you have a little bit at the Cangrejos deposit, and again, there's two deposits, Cangrejos and Gran Bestia, and Cangrejos would be the first one to be mined over the first 14 years in the feasibility study, and then Gran Bestia comes in year 15 roughly. So Cangrejos to the southwest is still open, and it's open at depth. So there is the potential to expand that. And then there's Blue Sky. There's a couple of porphyry targets to the north of Gran Bestia. One is Valorizo, which we've done a lot of field work, soil sampling, geophysics, and it's a really good target. We haven't drilled it yet. And then Pan de Azúcar is another one. So there is within the 5,000 hectare land package other targets. I think down the road, that's something that we'd want to look at. But right now, we're just focused on getting this feasibility study and permitting the operation to get that over the line.
One of the things I think that any suitor would look at here would also be the ability to expand on what is there and continue reserve replacement and expanding the operations, growing the resource base. I think that's important here. And I think that follows on with even an example of what Lundin Gold has been able to do. And so I think you guys still having that prospectivity and being open on some of the trends makes a lot of sense here. And I think that's an important component, even though the market doesn't seem to respect that at the moment. On capital structure, Marshall, I'd like to have you just cover where we are on the current shares outstanding, the cash on hand, and if that, in your view, carries through to the equity portion of the construction finance that is maybe potential here, and then also the key shareholders on the roster that you'd like to mention.
Yeah. So there's, I don't have the exact number in front of me, but I think there's about 450 million altogether with some warrants and options. So that's a basic share structure. We're trading just below 50 cents a share Canadian as we speak. We've got a draw coming up with Wheaton Precious Metals. We did a stream, and I'll talk about that here in a second. But we have a payment coming in December, early December, $6 million payment. And that payment should take us all the way through the completion of the feasibility study. So that's what we're working to now. We have to deliver a binding term sheet to Wheaton by that date for the royalty, the investment production agreement stuff we talked about earlier. So we think we'll get there, and then that'll give us the money we need through the feasibility study. And then we have to look at what do we do in 2025 going forward, assuming that we're not taken out along the way. Then we would have to look at sort of raising equity or some sort of financing that would take you towards construction. So if we go back and talk about the Wheaton deal, basically it's a stream of 6.6% of the gold production that gives us 300 million in financing. Of that 300 million, 48 million is related to feasibility study and early works projects such as land acquisition, et cetera. So then when you get to financing, that leaves 252 million pro rata. The PFS initial capital was around $1 billion, and that was for a 30,000 ton per day initial project. We're moving to 40, so we're going to see higher initial capital cost, somewhere around 1.2 billion, possibly higher. So you have maybe 20% to 25% of the capital, the initial capital to build the project finance with the Wheaton stream. If the company is acquired, that stream can be bought down to 4.4% of the production. And there's a transfer price, so we get 18% of the spot price for the gold once we're in production until Wheaton gets paid back their 300 million, then it goes to 22%. And that's kind of the basic outline of the stream. Let me add one more thing there too. The NPV at the PFS goes down roughly 10% from this stream, but the IRR goes up from 17 to 19% because of some of the money prepaid that you don't have to raise going forward.
Yeah, good point, and I appreciate you showing that. And I think doing this how you did it, I think is a fair opportunity here that you guys were able to secure, and it also notifies the market that you guys are able to already get that percentage of the capital requirements up front done. And so, at this point, it's putting together the final pieces there to get the rest done. Appreciate the comments there, and I think that is a good structure, and I don't think it diminishes any potential suitor looking at this, because obviously the suitors that would be looking at it have the financial capability to flex on what is you guys have put forward there as far as the optionality of the Wheaton stream. So I'd like to have you talk about another angle here, which I think is important for folks, and also is important for your guys' work in Ecuador. But talk about the project in terms of the benefits and also the impacts to the community and net impacts here, and how some of those maybe impacts are being mitigated. Because if built and operated successfully, this project has the scale to be a notable economic and career development center, not only in the region, Marshall, but countrywide, big taxpayer, and potentially very similar to the net positive impacts seen so far for the communities around Fruta del Norte. What are your thoughts here? And obviously, it's a substantial a driver. Just share how you look at this from the Lumina standpoint.
Yeah, it's a really good question. I think let me break it down from the near project level of what we've done to date, and then kind of go forward towards the production scenario. So we're in El Oro province. It's the gold province if you translated from Spanish. Historically, there's been gold production in the Ponce and Enriquez area and some other areas around. There's been placer mining below the Cangrejos deposit, so there's a mining culture, so that helps us socially. I think the scale of the project obviously is significant compared to the current operation. So, along with that, employment, services, all that sort of stuff will be significant in the area. So, let me give you an example of just on the exploration level what that's meant. So, when we did the infill drilling program for the feasibility study, we were trying to move the first 3 years of production from a probable reserve to a proven reserve. So we had to drill roughly 8,000-meter drill program. We use man-portable drill rigs. We have to have community labor to build the trails, build the pads, move the drill rigs, do the reclamation. And the nearest communities is Valle Hermoso, the significant community. It's about 500 people, about 8 kilometers away from the project. And basically, we couldn't get enough labor in that community to help us with that program. So we had to go out further to other communities, sort of in the indirect area influence of the project. And we had 150 people moving drill rigs and doing this work for roughly a 10-month period. And we still have some ongoing work related to the EIS, the Regional Water Monitoring Program. And we've just completed all the drill holes. Now we're doing some pump test. And so that's a significant impact. Plus, we try to purchase locally. Their agricultural communities, we purchase whatever goods and services we can. We have active social programs working with them to improve their crops. There's cacao, banana are the primary crops in the area. We've done greenhouse programs. We work with the communities on education, health, a lot of those type of things, infrastructure improvement. So there's already been direct benefits to the local communities just from the exploration stage of the project. So one of the things that we've also done is we've started to work with the University of San Francisco to Quito and what used to be the old Missouri School of Mines, where I went to school in the U.S. It's called Missouri University of Science and Technology. And we've done a scholarship program, myself and Ross Beatty, to train mining engineers, Ecuadorian mining engineers. So, training and education and all these things for the labor force will be significant going forward. And, during the construction phase, it's probably a couple thousand people. We're working on all this right now, but I'm talking off the cuff here. And then, during operations, there's probably 1,000 employees somewhere in that ballpark. because of the scale of the project. And that's going to benefit the immediate areas. And then we've also done other things because, the obvious concerns are water, tailings. You look at the history of tailings failures in Brazil recently. We've gone with a dry stack tailings storage facility in the FS. That'll allow us to recycle about 85% of the water um, back to the plant, and you have a stable, more of a landfill type situation than a rockfill dam that could break and run out into local waterways and stuff. So we built those kind of things into the project design. We're also looking at other ways to protect water and provide water sources. The regional water program that I mentioned to you, we're working in cooperation with government authorities, and that'll help us define groundwater sources that we could use for potential supply, along with surface water, rainwater that's partially in the mine plan um, at this stage. So that will also have the potential to provide community water in the area. There's significant rainfall up at the mine site. There's about 2 meters. At the tailings facility, there's about a meter of rainfall. So, those sort of things, water and a good secure tailing storage facility will help some of the environmental stuff.
Very well, Marshall. I appreciate that. And I think, there's a lot of stuff there, whether it's, the dry stack approach removes a pile of risk. I mean, a lot of risk is removed there. TSF failure type scenarios. That's a good thing. And then, of course, the water collection and water recycling, I think, is very important. And, that kind of rainfall and the ability to store water there based on rain that falls into the pits and the use in the processing there, I think makes a lot of sense. And of course, the treatment and discharge that needs to happen there, of course. Also just with the long-term nature of this project, and of course, I'm sure you guys will be looking to look at employment targets for Ecuadorians and all of those things that you'll be working on here as the government negotiations continue. But just also the fact that this project in the mine life allows for so many indirect businesses to fire up to get started,
Yeah,
the career and skill development that happens that period of time allows these businesses to continue to seek more clients in other industries that they can serve, not just mining. Of course, for example,
sure.
let's say you're selling food to the mining staff on site. Well, of course, you can do those services to other industries too, and that it allows what might be 100% services to the mine in the beginning for them to diversify their business, grow their business, and then seek other clients over a long transition period, a super long. It's really just it's gracious that you have that kind of potential connection and opportunity to work over that long period of time and diversify your business. There's not that many industries that allow that type of opportunity. I think it's great, and I think you look at some of your guys's models to look at as well. With Lundin obviously being probably one of the standout models there in Ecuador. There's a few others and a few more coming online, as you well know, as you mentioned before. Any further thoughts there before we move on?
There's a really good example just to the south in Peru. So I started to work in Peru in, I think it was probably 1993, 1994 during the Fujimori government. And you had a mining industry. Peru had been a mining country, but you hadn't had the explosion of major mines. Southern Peru Copper at the time was a big porphyry producer, but they weren't able to take their money out of the country prior to Fujimori coming in. So basically, what you had from that time period, 94, you had several mines. You had Tintaya, Antamina, on and on. There were several other mines that came into production. And what that did is that lifted, I think it was somewhere on the order of 40% of the population out of poverty. And mining became, the major export and the major economic driver to the country during that time period. So on a different scale, Ecuador is an emerging mining jurisdiction. So that potential to grow and become a very significant portion of the economy is there. I mean, there's some really good copper discoveries in the country. Cangrejos is a large gold copper porphyry that'll have 26-year mine life and possibly more. So those sort of things really will help uh, drive the poverty equation within the country. And I think we've got elections coming up in February, first round and second round in April. And President Noboa, young guy, 38 years old, roughly, maybe a bit older, he was educated in the U.S. He understands the need for foreign investment, and he understands the need to bring a lot of this youth unemployment. Really, if you look at 20 to 30-year-olds males in Ecuador, there's pretty high unemployment rate, and he's talked about wanting to bring that forward with foreign investment, mining in particular. He showed up at PDAC. He met with mining executives, and he's an impressive guy. He took over Lasso's term when they tried to impeach Lasso, and he dissolved Congress. And so by the time the elections come up, he will have served roughly 18 months. Right now, his approval rating is over 50%, and he's likely to be the president for a 4-year term. I think that'd be really good for the country, particularly the mining industry. And, I think poverty reduction and growing the economy are kind of his key areas. He's been fighting delinquency and some of the cartels. When you have this disenfranchised group of young people, pretty easy for them to move towards, if there's no real jobs, move towards cartels and that sort of thing. Not saying that happens to all of them, but it's some of it for sure. And President Noboa has talked about that. So I think, all in all, he's got the right vision for the country. He also wants responsible mining. He wants environmental protections in place. He wants social programs, social licenses that are strong for these mining companies. So, I think Ecuador, as an emerging mining jurisdiction, has a lot of potential. You hear a lot of noise out in the market that Ecuador has all this risk. You get the headline of some of the cartel issues with Ecuador being a transshipment port or region for Colombian and Peruvian cocaine run by sort of the cartels in Mexico and Colombia. But he's taken on that challenge with the violence related to that, and he's taken on the cartels. So it's a bit like the El Salvador model. We'll see what happens over time, but that's the main noise you hear in the market. And as a result, people say, "Oh, the geopolitical risk in Ecuador is horrible." I don't quite see it that way going forward, in particular with the growth of the mining industry and the broader economy.
I don't see it in the way that some of the people you mentioned are seeing it. I think more the sense of understanding that, look, it's Ecuador. First of all, you have to have these industries, and that retail hotels and bird watching and tourism will not cut it. That's not going to happen because you bring in those policies of let's just do bird watching and let's do retail tourism, that you can't find the jobs for maybe some of the young people, and then they gravitate, as you said, towards whatever they can find. So that's how you propagate it. And that economic sense has to first come in the government. I see the economic sense part as the biggest risk, just economic sense. And Marshall, I think you and I have realized here that economic sense is struggling around the world.
Yeah, just
And
look at
so
the US right now with some of the issues related to our upcoming election, right? And the state of the economy and what the government has done hasn't always
yeah,
helped, right? So, and it's a global phenomenon right now. Throw in
oh
a
yeah,
couple of wars on top of that, and it's crazy.
yes, exactly. And so the region itself, you have those issues, not just, in Ecuador as a transit country or Peru based, Peru origin, material drugs, Colombia origin. The whole region has facets of that. And of course, that's been structured in part. If you do some history, it's been structured in part because of US involvement in the region decades ago. And so, of
Yeah,
course, they diversified themselves. Yes, there's various facets. It just doesn't come from one country. I'm concerned about my gold resource mining junior stock investments because of cartels. It's not that. It's more of government sense is the
yeah,
important key factor here. And I do think that you can get punished if you're not careful with those economic policies, as we've seen in other countries. I can use Panama as one example of, look,
yeah.
you have to be inviting with respect to foreign investment. Foreign investment's important. correct tax policy is very important. And you have to have a few different industries that thrive. And if you start to cut any of those off, you risk the foreign investment part. Because if you hurt one industry, people start to say, well, what are you going to do to me in my industry? And so that's, I think, the important part. And then, as far as the drug transit, let's not even get started on the United States. Big pharma is your drug transit in the United States. So it's in effect the de facto cartel there. Anyway, so I really appreciate that. And I do think that those are the kind of the key areas. And I think that, it's good to see those administrations come in with some good sense. I can think of way worse jurisdictions to place capital. So anyway, I appreciate your comments there. Marshall, just with respect to M&A, and of course, any other comments you wanted to make on the prior topic, but the company will be weighing, it has been weighing, the sell it or build it question in the coming year, in the coming 18 months. What can you tell us at this point about what the outcome will be based on your suspicions, based on prior discussions, of course, that have been had, and of course, current interested parties in the project, and the desire of the Lumina Group to pull as much value out of the project as possible?
Yeah, I mean, so I've been with Ross through all the Lumina Group companies. I started with them in sort of the tail end of 2004. And the business plan at the time was Ross wanted to acquire a bunch of copper projects. He had made a trip around the world. He saw that copper at the time was at about 85 cents. And he saw a construction boom in emerging China, different things like this. So he went out and acquired 10 large next generation copper projects. And the business plan was to add value by drilling, de-risk them by engineering, and move them on to somebody that would build them. And these were generally large capital costs, initial capital cost projects. And, as a junior developer, it's hard to take on billion-dollar plus sort of projects. So the business plan was to move those on to somebody that would build them, and that's really been the general business plan of the whole Lumina Group. Now, having said that, if we get in the situation where we have to build something, we have the capability. I'm on the board of Equinox Gold. Ross founded that, and we merged one of the companies I was running, Anfield Gold, with Trek Mining and Newcastle Mining to form Equinox. And we just completed the construction of the Greenstone mine in Ontario near Geraldton. It was a $1.25 billion build, and did it on time and on budget. So, with the combined resources that we have, Ross, myself, and people within our group, we could build this thing if we had to. Now, that's not the business plan, right? It's the general Lumina business plan. But as I mentioned earlier in this, what you're seeing in the developer space is having to move projects further down and de-risking them before the takeouts versus earlier cycles years ago where you might have been taken out at a PEA or a PFS. So, that's one of the things. And, there's a couple of projects out there, for instance, like Argonaut has to, they're in construction. You've got other companies like that have been taken out. That Magino is one that I'm talking about there. So, that may be what ends up. It's hard to say, but we're looking at all of those scenarios. We're looking at if we move through the feasibility study and get the permits, and we have to do project financing, we'll do that. So that's kind of what we're looking at. But again, the business plan, Ross has come out publicly more than once saying that he wants to move the project on. As the largest shareholder, he has about 28% of the company. We've got an Ecuadorian investment group that's really solid. They've got about 16% of the company. Management of the board has 8%. And then we have a fund out of California, Route One, that has about 6%. So, you had asked me that earlier, and I just realized I admitted what the ownership was. But basically, we having that ownership in a pretty tightly held group is a plus and a minus. I mean, liquidity in the market, not so much liquidity because of that 58% or so that's held by these groups. Plus, you've got groups like Haywood that has quite a bit on their books. So basically, the groups are looking at that business plan, as I mentioned, the historic Lumina Group plan.
Absolutely. And I think that was the initial goal. But the key point here is if you guys had to move it forward, that you could. And I think that's important. It's not that you don't have that capability. There's many others out there, as you know, in this sector, Marshall, that can only sell and they don't have the build capability. One of the worst examples of that on a segment basis would be the uranium segment right now of the junior natural resource market, where everybody needs to sell and nobody can build or operate, or very few, I suppose. Just with how you see it, I mean, Ross has definitely mentioned it in a couple different occasions in the past. And when you see this coming together, as we've talked, in terms of taking this further down the development pathway before a potential buyer pulls the trigger, do you guys still see that that is based on your conversations? And I know you have to be careful here, but do you really see that as the most likely outcome, say over the next few years? Want to put it out there? Is that where you guys are still gearing this and based on conversations, how you see this playing out?
No, I think you have to do what I was talking about, follow the business plan and then plan for alternatives if you have to get there. I think that's probably all I'm going to say at this point. But, there is people looking at the project, people know about the project, and we're out there talking about it at conferences and such. So it's not like we're hidden.
Well, I think I have a good idea of what that means. So I appreciate your thoughts on that, Marshall, and you guys progressing this forward to take away those kind of further risk levers that are left. And you guys have already gotten most of them gone. So appreciate the thoughts there. Well, Marshall, short of anything else you wanted to add, let's leave it there for now. For potential investors who are listening in, the company has a market capitalization of about 200 million Canadian dollars. Why should Lumina Gold be considered within the institutional, family office, and retail investors portfolio at this stage?
One of the things that we're seeing is some generalists starting to look at the market a bit more, and then family offices and retail investors, like you say. As far as the institutional hedge funds and private equity funds, liquidity is kind of an important aspect. So, because of what I mentioned earlier, we don't quite have the liquidity for some of those funds to take us on, but we do have a Route One that's invested with us. Basically, what I think is, we're at the point where we're such a low valuation versus what we have as far as resources and the economics of the project through the pre-feasibility study and what we'll get in the feasibility study. We've had the disconnect between our share price trading flat with all financings and grown the resource 4 times since 2017. I think all the metrics, any way you look at us, we're undervalued play with good upside torque to the metal price. And I would encourage everybody to take a hard look at us. And I think, that's the end of what I have to say here, Andrew.
Yeah, and I think a very reasonable outcome is on the way here. So appreciate that, Marshall. And how can interested folks contact the company?
At our website, luminagold.com, we've got quite a bit of information on the project. There's presentations, there's technical reports, there's a lot of information that's public that any sort of investor interested in the company could review. And then also reach out to Scott Hicks and myself if you've got any further questions.
Marshall, well, look, thank you for coming back on to update. Looking forward to seeing these various items progressed at the company, and looks like we'll have some good news coming in the coming months. You're welcome back anytime. Thank you.
Thank you.